Hello, everyone. My name is Milton Turcios. I am the VP of Operations here at CorpNet. Thank you to everyone for joining our November live. And if you're watching on the rebroadcast, we welcome you as well. This broadcast is meant to be interactive, informative. So if at any point within the presentation you have a comment, a suggestion, a question, feel free to pop it into whatever chat platform you have. And then we do have moderators in the background pushing up questions to me that we can answer at the tail end. And again, if you are watching on the rebroadcast or watching a recording, whatever platform you're watching on, albeit Facebook, LinkedIn, you can also leave questions, comments, suggestions there as well, and we will be able to interact with you that way. So a big thank you for all that are joining live and will be watching again via the recording. As we approach the end of 2024, we're November 6th, 2 months to go, and we will be in January of 25, which is crazy to think about. We wanted to take a second and just talk about compliance. And there's a different myriad and aspects to business and business entity compliance that we're going to get into, albeit internal, external compliance, things that you actually have to submit to different agencies versus things that you just have to do and keep organized, within your own individual records. I can tell you a million stories of clients that have, come to me over the years. I've been doing this for 13, 14 years now. At the very last second of a business transaction, at the very last second of their calendar or fiscal year, needing to get something done, and requiring 8 filings at a time to get in good standing. So let's try not to be in that situation. Let's try to check off all of the boxes and dot our I's and cross our T's, sort of thing. So let's get started. I am going to share my screen here in a second. Give me 1 sec to pop that up and we will get started. Let's go entire window and let's share this PowerPoint. Okay. So I won't go into full slideshow mode. I kind of like to see and preview the slides on the side. Hope that's okay for you guys. And I know last time we went full slideshow mode, it gave us some issues. So again, the topic for today is year-end compliance and staying on track. The very first thing we want to talk through is just business compliance 101. What is business compliance? What is the topic we're bringing to the forefront today? So just to also give you some insight on the presentation style, there is a lot of content on these slides, and I won't be reading them word for word, just summarizing, giving general ideas, maybe reading a few of the bullet points as we go, and then this deck will be available to you as well. So what is business compliance? I'll read just the first bullet point here. So corporate entity compliance involves maintaining the good standing of a corporation or an LLC in any state where the company has been established or authorized to conduct business. So what does that mean? You form an LLC in your domestic state of California, where we are, and we foreign qualify to do business in Florida and in Texas. There's different paperwork and annual requirements that we will need to, or we're under the obligation to fulfill to maintain good standing in all those different states. And not every state is the same, right? There are similarities, which we're going to learn in the presentation, but not everyone is the same. There's different deadlines, different types of submission forms that one has to walk through as a business owner. And I talked a little bit about early in the presentation that there's internal and external compliance. So we'll talk about annual meeting minutes as an internal compliance item versus an annual report that you file with the Secretary of State and have to provide some information. We're going to talk a little bit about the implications of not filing a simple form. I think that some of the general notion around business compliance and doing such a simple form like an annual report is like, yeah, I'll get to it. But if we don't get to it timely, there are some implications, and I will tell you some of the stories without naming names of customers and clients and situations we found ourselves on by not taking taking 30 minutes to review our due dates and paperwork and compliance items and things of that nature. I just mentioned this, but the regulations vary by state. So a lot of the times folks go, yeah, I'll just do what I'm doing in my home state, and that should carry me through. But if you're registered in 30 states, there's a lot of paperwork and different government agencies and different deadlines that you're going to have to walk through and fulfill. So the slide is just calling that out. There's annual fees and filings, such as like an annual report and $25 fee here in California versus a tax due report or no tax due report with the tax board or the comptroller's office out in Texas, versus filing the individual taxes that you need to do on a local level, sales tax. If you're selling tangible items in a state versus the other, there's just so many different types of compliance items that we'd want to just, again, dot our I's, cross our T's, and ensure that we're rolling into the next year having everything up to date. What are some of the consequences of not being in compliance? And again, when I was an account manager here at CorpNet and actually working and dealing with the end consumer, there was always this notion of like, oh, I have 3 months to get to it. Oh, I have a month to get to it. Oh, what's the due date? I'll pay you the day before, right? And not really understanding without it sounding very scary. You see the beware here on the slide with exclamation points, that there are some heavy implications that happen. And I'll just give you some scenarios and things that we encountered. When you say here, risk of piercing the corporate veil, what does that mean? I mean, the root of forming an LLC or a corporation is to separate one's assets from the company assets and the activities and things that are happening. But when there is no LLC, when there is no corporation, all of a sudden that's unwound. That doesn't exist anymore. There is no separation. So we've had instances where, like the state of Florida, for example, if you miss your annual report, we'll give you a certain slot of time to come back and pay late fees and do your annual report. But if you miss it, say post like 4 months, which I believe was the rule a few years back, they just administratively dissolve you, right? So there is no LLC, there is no corporation. Someone goes to look you up, you don't exist, and that happens in different states and at different times. But why do that dance where you could just timely file something as simple as an annual report and not run into those scenarios? States could impose late fees, and you can have interest payments, such as franchise tax that you pay in Delaware for having a corporation or an LLC in Delaware. And the LLC, I believe, is like a flat $300 versus a corporation. There is some tax calculation based on shares and assets and things of that nature. But the moment that you go one day over, I believe there's like a $200 penalty plus a 1.5% interest that you have to pay to then go file taxes that you should have done timely, at a certain time point. Poorly affecting financing and business transactions. So here comes some of the stories and the scenarios and the risks, right? We have people going like, hey, I'm setting up this new entity or this trust where my entity is going to be a part of, and all of a sudden they are not allowing me, sorry if you can see that on my screen, something just popped up. They are not allowing my transaction to go through because they say that I don't exist or I'm in bad standing with the state. So then we go look on the Secretary of State website and we see that they are not in good standing. Like, for example, in California, you can go into bad standing for not filing your annual report, not paying your franchise tax with the franchise tax board. And they have like 3 different categories that say good standing, good standing, good standing. So it could affect financial transactions, business transactions, especially when you're opening up new accounts where they do ask you for articles of incorporation, your latest annual report. Um, uh, Particularly if you're qualifying into a new state, they're going to ask for a certificate of good standing. So I think that we have a bullet point there also saying it could delay business expansion into another state. So if you rapidly need to get into Florida, Texas, for whatever reason, or any of these other states, they're going to ask for a certificate of good standing from your home state. And again, in a state like California, where we are, if you're in bad standing at the Secretary of State level or the Franchise Tax Board level and a few other levels there that all are intertwined, they won't produce a certificate of good standing for you until you're back into good standing. So it causes delays. I've had situations where people are like, I have $1 million in my hand and I can't go deposit it, right? I can't go open up that new account that I wanted to. I can't join into this business venture because I'm not in good standing, right? And to our partners, again, we see that a lot of people are coming to you last minute saying, fix this, right? How did we get here? How did you allow me to get here, right? And some of the conversations I have with partners is like, we don't take care of the annual compliance stuff. We set them up, we give them advice on how to set them up, and we file their taxes, right? And so this is where there's good synergy, with CorpNet and some of the resources that we have and are available not only to you but to your clients to stay on top of these compliance items. And again, we don't want to dance around the consequences of non-compliance. Talked about this notion of internal versus external compliance, and I want to hit that for a little bit. Internal compliance items are things that a corporation or LLC are mandated to have and keep, but it's not something that they're going to ask you to present in a every year, every other year, or by a certain due date manner. It's more so, hey, we expect corporations and that are just newly formed to create bylaws and minutes. Most banks don't even ask for these now. But if they do, you should have it. And you're mandated as a corporation to have internal governance rules and things that are signed off on. Who are going to be your directors, your shareholders, who's authorized to open up bank accounts on behalf of the business, and so on and so forth. Also pretty important if you're going to have other shareholders with you. If this is a partnership plus, meaning 2 or more people involved in any sort of entity, it's always good to have things in writing, but you're mandated to do it based on just having and operating a corporation, much like the annual meeting minutes as well. So if you have a corporation, albeit C Corp, S Corp, professional corporation, you're still mandated to keep annual meeting minutes and organize them and have them just in case you ever get audited, just in case you're ever going through any sort of financial transactional process. They're going to ask for these items that you're mandated to have. And again, you're not submitting them anywhere, so there is really no pressure to submit them to the Secretary of State or the Franchise Tax Board. And again, one of these items where there's this notion, it's important till it's important. And our posture is, let's just get it done. Let's get it done right, and let's do it every single year. And let's keep you on track, sort of thing. And same thing goes with LLCs and operating agreements, right? When you're setting up an LLC, same governance rules. Who are the members? Is it member managed or manager managed? Who has membership interest based on a contribution? Is there a payback schedule based on that contribution? And so on and so forth. Who can open up a bank account on behalf of the LLC and different designations, positional designations, things like that. Again, important to have within an LLC. However, you don't have the annual meeting minutes like you would with a C Corp, S Corp, or professional corporation. Then corporate resolution, so annual meeting minutes, anything that you elect to do, the LLC or the corporation elected to invest in a property, right? You should probably keep in writing the details of that transaction, who agreed to it. When you set up an operating agreement or your bylaws, there's like voting interest percentages and managerial things like that would follow suit. And the proper way to do things within an organization is always have it in writing organized by year. And again, it helps when you have the mandate for annual meeting minutes within a corporation to keep tabs on all of that. And then external compliance. So this is where you do have to go file something with the Secretary of State or at a federal level. And there's just a slew of items here within the presentation that we can run through. And again, I won't go through every single one. So if you have questions about one of these topics in particular, feel free to drop it in the chat. But I'll go through a couple. Some of the obvious ones are your articles of incorporation. If you're forming a new business and you're operating as an LLC or a corporation, you should probably have your articles of incorporation already filed. Employer tax registrations or payroll tax. If you are hiring an employee in a new state, you want to make sure you have all of your employer tax registrations in line, albeit withholding, SUI, paid family medical leave, local employer tax registrations, things like that. Same thing with sales tax and sales tax registrations. You're selling tangible items. You're collecting sales tax. You want to make sure that you have a sales tax account. Foreign qualifications, if you're operating in different states and albeit all the different measures and the rulings in the individual states, it's designated that your entity should be foreign qualified based on the activities, based on the nexus, then ensuring that you have all the foreign qualification paperwork established as well. Annual reports and amendments we can talk about. So annual reports, most states will have an annual report requirement. And there's things that you can update within that annual report and things that you cannot. And all the things that you can't update within an annual report, then I would call out the articles of amendment, going in there and ensuring that all of the information that the state has is up to date. Again, can seem very minuscule, but has big impact. And again, I have stories of financial transactions. Hey, they won't allow my investor to deposit X amount of money into the bank account because they're saying they can't find them on the Secretary of State site. In a state like, let's say, Florida, that does show the members and the owners and the individuals involved, within an LLC and their designation. So just important that as you're adding folks into your organization or making any sort of changes where your domestic state or your foreign state has the information, that you make the relevant updates. And again, it can either be done via an annual report or via articles of amendment. And we'll discuss some of these other things in detail as we go. There's some other slides that we have. Articles of dissolution as well. So if you're not looking to operate in 2025, taking a look and saying, okay, well, what's a wind down process? And sometimes it's as complex as like, I need to file articles of dissolution in my home state, withdraw in 3 states, and part of that withdrawal process and dissolution processes, I have employees, so I have to go wind down unemployment insurance, paid family medical leave, withholding in all those different states, and things like that. So the compliance is not only meant to be a compliance item leaning into the new year and going to the new year knowing that you're up to date with everything. It's also, hey, if you're looking to wind down, what are all the different items that are related to each other that I have to wind down? And again, why we wanted to bring this topic to the forefront. So I've talked about annual reports for a bit now, and I won't go too deep into them. But again, just an annual or biennial, every other year mandate for most states, for most entity types. And it's important to keep track of. And I know it's chaotic sometimes to keep track of. So if you are registered in 10 plus states, what resources do you have at hand to know when you have to go file in California versus Texas, Florida, New York, New Hampshire, list goes on and on. All right. So I want to throw out some resources to you all that we have actually at CorpNet. So the first is just public facing in general. And I know that the moderators can drop this link in there for you guys in the chat as well. The last time we've updated this page is September 5th of 2024. So just a couple of months ago. So we have tables for C corporations and LLCs and their annual compliance filings, and just general information that you guys can pick up on. Like, okay, I have a company in California versus Colorado. What are some of those compliance items that I need to be looking at, albeit an annual report or a franchise tax report, things like that. So we have a very helpful table posted via the blog that you guys can link out to. But just to give you some of the examples when I say every state is different, right? And I'm just going to talk about annual reports for a second here. So in California, for a corporation, you have to annually file this statement of information. And the due date mechanism that they use is, well, hey, your due date is the last day of your anniversary month. So let's say that I formed a corporation on 11, so November 6th of last year of 2023, then my California corporation's annual report or statement of information would be due November 30 or 31st. What is it? We have 30. Yeah, November 30th of this year of 2024 is when my due date would be. Very different to, let's say, Hawaii, different mechanism that they use. So their mechanism is it's due on the last day of the quarter that contains the anniversary month. A mouthful just to say, hey, if you formed in November 6th of 2023, and it is a yearly frequency, then this year in 2024, you have until December 31st. So the last day of the quarter that contains the anniversary month. And you get, I think that's the gamut of the complexity. It's either anniversary date or the last day of the quarter that contains it, but you also have to look out for submission frequency every 2 years, but only on even years, right? So states do very, very funky, for lack of a better term, things. And we have to be aware of all the different states, especially where we are registered. And one of the things that I also wanted to talk through is our alert system inside of the Corporate Compliance Center and the alerts that we send out. So hopefully you guys have all been in your portal, those that are partners and clients. And this is my test account, so the company names are going to seem a little funky to you as well. But ignoring the test names in my test account here, I didn't want to call out, if you go, well, this is complex. How do I create a mechanism to keep track of all of my clients' compliance based on the complexities of every different state? And the answer is you don't have to. By using CorpNet, you do have a resource. There is a Corporate Compliance Center where you can import a list of all of your clients and companies, and the system will pick up based on its due date and some formation dates and its calculation when the next due date is and it's coming up. So whether it be an annual report filing or, as you see here, a BOI report filing, we do have a mechanism that you can keep track of that. I also want to, let's see if it logged me out yet. It did. I'll have to log back in here in a second. But essentially, when I log back in, we have a mechanism to also import companies, and I'll show that here to you in just a second. So going back to annual reports, you do have some resources here in the deck. Also, we will point them to you in the chat or post them for you. So you have this link to our annual report page, along with understanding that now within the portal under the alerts tab, you are able to view your alerts, purchase items right there in particular. We talked about articles of amendment. So again, in an annual report, it's a submission in a form updating information to the state. I'm still in business. The information is either all the same or these things that you're asking for in this form have changed, but not every single thing that you once provided to the state can be updated via an annual report. So sometimes you will have to go in and file articles of amendment. So the changing of a company name, typically you can't do via an annual report. Sometimes you can change an address or not, depending on the contact or the individual and the position being reported. You change your registered agent, again, sometimes in an annual report you can do that, but if you fail to do it in your annual report, or you're outside of a cycle, in some of these states that you're doing it every other year, important that you go file articles of amendment. Moving on to corporate meeting minutes or annual meeting minutes. We talked about this earlier in the slides, that a corporation, albeit S Corp, C Corp, professional corporation, has to do their annual directors meetings, annual shareholders meetings. And again, this is an internal filing. This is not something that you're going to file with any government agency, but important that it does get done. And I've seen people last minute getting audited for whatever purpose, getting audited externally and it being imposed on them, or willingly being audited because they're going through some financial transaction and they're like, I need 10 years of meeting minutes that I need to put together, right? So again, would like to stay off that platform and that dance, and staying up to date and compliance year by year is important. And there's some details of what goes into them. CorpNet has this product as well that you can purchase with our agents. So what should you do with your meeting minutes? Again, these are meeting minutes where you're duly electing, re-electing your positions, you're stating what has happened in a grand scale, a grand scheme within the organization. And again, our product allows for following the structure, recapping of the year, of the fiscal year, doing the re-elections, but also miscellaneous items like the board decided that we're going to open up X amount of more spaces or invite X amount of new directors, or dwindle down our voting percentages, whatever big structural changes might be, down to individual meeting minute items like we decided to invest in real estate, right? And there's certain things that you might want to keep either in those annual meeting minutes or an individual resolution or corporate resolution that you sign. And CorpNet has a resource for both. Important that you keep this organized and again internal, in case you ever get audited. Where I did want to spend a little bit of time today is this big one, is the BOI. So the Financial Crimes Agency rolled out the Corporate Transparency Act, or the BOI, as we know it, the Beneficial Ownership Information Report, as a requirement. Doing so there is transparency behind who are the end-all be-all beneficiaries of these for-profit businesses like LLCs, corporations, and essentially trying to create more transparency around or disallowing folks that are drug trafficking or in these grand scheme financial crimes are not setting up LLCs and corporations, and being able to identify them. And it affects everyone else, right? And the notion out there, even I was in a trade show last week and there was folks going like, well, I don't know if all my clients have to file this. And we started walking through all the different things and who needs to file a BOI, who doesn't need to file a BOI. And there was still a lot of what I call misinformation or about who needs to do it and when. So we wanted to bring it up to the forefront again. So here are kind of the rulings and the timeliness rulings behind the BOI. If you have formed a corporation or LLC that is required to file the BOI prior to January 2024, so I'm talking about this middle bullet here, just chronologically, then you had until January 1, 2025. And I say had because everyone waited. Everyone that we were promoting doing this early to were like, no, it's going to be repealed. We're not going to have to do it. And now at the last second, they're going, do I have to do this? And the answer for most people is yes, you have to file that report. And CorpNet is actually offering a solution for that now. So if you're a partner out there, and again, I was talking to a lot of partners at this trade show last week, they were like, I just need to refer all this business out to you. I don't want to touch it even as a reseller. I want to refer this business out to you. How can we do it? We can send you a link that you can send people directly to, a link with your partner ID in there so we can keep track, give you a kickback via the referral program that we have. But again, going back to the timeliness of it all, January 1st, anyone that formed prior to this year has until January 1st of 2025. Anyone that formed within this year has 90 days. So anyone that formed right now in November would have until January to file. And then I'm I'm getting a timeliness update. I'm going over a little bit, so I'll try to speed up. Then any new business formed after January 1st, 2025 only has 30 days. So that 90-day window is closing to 30 for anyone starting a new corporation or LLC. So my call out, if you're a reseller, or even if you're referring clients over to CorpNet, that just gets added on. They have to do it. I would almost treat it as like you're doing your articles of incorporation. Great. Outside of a select few people, you have to do a BOI along with it. And again, you're going to get this slide talking about the BOI. We have more resources on our website about the BOI. So I'll skip over this slide. I'll talk about entity conversions for a second. If you are an LLC converting to a corporation or a corporation converting to an LLC, important that you filed your conversion documentation with the respective Secretary of States. Business licenses and permits, very important that you renew all your business licenses. So if your clients are new to their trade or forming an LLC or a corporation for the first time in a particular trade, that we walk through doing a business license research package as an offering that we have to ensure that they have all of the licenses that they need, not only to operate the LLC, but to operate the actual business in the trade and the things that they are doing at a federal, state, or township level. And the same thing goes with renewals. A lot of these local agencies don't send out reminders, just tell you initially when you first get your permit, hey, you're going to have to renew 2 years from now, and then you never get a reminder. Or you move and they don't have your updated address. So important topic to just check off of, like, what licenses do I have? Reaching out to those agencies, ensuring that you know your due dates and your the occurrence and the frequency of those renewals is very, very important. I talked a little bit about the wind down process. So compliance is not just to dot your I's and cross your T's on anything rolling into 2025. It's also, hey, my client's no longer operating their LLC, their corporation. We've talked about a myriad of different compliance items. They're going to roll that into 2025, even if they're submitting $0 tax returns as an employer or as with their sales tax account. So ensuring that as you're dissolving businesses, you're also looking at the payroll tax registrations, right? State employment insurance, state income tax, paid family medical leave, sales and use tax registrations, and winding those down. And on the flip side of that is, if you've hired a new employee, in order to properly run payroll and pay all of the taxes on the quarterly basis properly, you do need to have your employer tax registrations set up in those different states. So there's a flip side to it. There's ensuring that you have all of the proper employer and tax accounts that you need to have within a particular state that you're operating, or if you're no longer operating in those states, that you're either dissolving, withdrawing, and closing out all of those different accounts. So just to recap, and I'm not going to go through every single scenario, but something that you all can read within the deck is, hey, I hired an employee this year. Okay, do you have your employer tax registrations all set up? Well, how can I find that out? Give CorpNet a call. Like, let's talk through it. I started charging sales tax. Okay, did you set up your sales tax account within a particular state? Do you have to, based on your particular state? I changed my business name. Okay, did you ever let the Secretary of State know that? Did you file your articles of amendment? Do you have any of your new like corporate items with your new names on it, things like that? So there's different scenarios or like trigger points that we wanted to call out here in the business activity performed this year, and then a compliance filing that's required. If you have any questions on any of this, you can always reach out to us here at 888-449-2638. Our website is www.corpnet.com. A lot of you that are active partners should have an account manager who should know all these different trigger points, who should know all about the different compliance filings that your client needs or requires. And we do offer compliance checks. So if you go, hey, I just onboarded this new client, they have a business in 20 states. How do I know that they're in good standing? Give us a call. Call Jose, Angelina, Jack, Misty, Marissa. You have also Sarah Kelly. But if not, you don't know your account manager, just call the number on the screen and ask for an account manager or a sales representative, and we'll be able to walk through all the different compliance items. So that's the end of me sharing my screen. I heard that we had some questions here in the background, so I will try to get to them. Give me a second here. Okay, I have one from Sunanda. Give me a second to read it. What about S corporation election and an LLC that wasn't big enough the first year? How flexible is the IRS with reasonable explanation for delay in election? Very, very good question. I'm going to answer it twofold. When you say, and again, we're not having a conversation, I won't be able to get your answer in real time. I guess the conversation you should be having with an account manager here would be, well, what is the scenario? Number one, when you say wasn't big enough, when you say wasn't big enough for the individual owner to get the benefit of being an S corporation, saying like, hey, we didn't think that they met a certain mark, or like the golden rule of making over $60,000, whatever the case may be, to ask for S corporation election. If you are looking to then say like, hey, late in the year, in October, November, December, they did reach a point, and now we do want to be taxed in 2024 as an S corporation, you can submit a late election with a reasonable explanation, as you mentioned there. And in my experience, I can only talk from my experience and not for this particular case, the IRS is pretty flexible with allowing and granting a late election for an S corporation. There's certain language that potentially could be used that helps in these scenarios. We have verbiage that we use in our late elections that will accountant that we contracted with to help us set up our late election product for our clients. So I would say if you're a current partner, Sunanda, thank you for being a partner. One, to reach out to your account manager and talk about the late election product. Again, CorpNet cannot guarantee that it's going to happen, but again, we've set up a system in a form with verbiage, drafted by a CPA that we really trust, that has been beneficial to a lot of our clients. And again, in my experience, the IRS has been flexible with reasonable explanation for late elections. But again, one of these compliance items as well. Now, I know that there were other questions here. Give me a second. Let me see what we got. My scrolling isn't working here. Yeah, very good question about the beneficial ownership or information report. Typically, they're looking for beneficial owners. And again, this is where I would recommend speaking directly to the account managers, individually, of who needs to be presented in the documentation, or bringing on one of my processing experts who are dealing with actually submitting the BOIs. But from my understanding, anyone that has a substantial, and whatever that amount is, could be 20%. I'd have to go back and look at the documentation, but that has a substantial ownership would need to provide their details to FinCEN, and that requires IDs and passports and all the different credentials that they're asking for validation. And again, Janae, I believe that's how you pronounce your name. I would contact one of the account managers just to be sure and double check the information, because again, I'm operating from a 10,000 foot view and level and running the operations and everything within the business, while the account managers, the processing managers know the exact detail to the T of the requirements and staying up to date. I have one last question here. My client is a single member LLC. Do they need to take meeting minutes? If so, how? Interesting question. So when you're setting up an LLC, you do have to do your operating agreement. And part of that is minutes that is attached to an operating agreement. Now, within a single member LLC, it is just one person doing everything most times. So all the different designations, like I elect myself as the member, as the manager, as the president, as the CEO, as everything. I think still important to sign off on all those designations, tracking the consideration whether it be a cash contribution that the LLC member gave to gain 100% ownership. Important to have and important to have on paper. If you're an LLC that's a multi-member, with more importance, it's almost like a partnership agreement as well of what happens with voting percentages, and outside of voting percentages, like all the different designations, president, secretary, vice president, who can open up a bank account, on behalf of the LLC. However, I do want to say that an LLC doesn't have a mandate like corporations for annual meeting minutes, directors meetings, shareholders meetings, things of that nature. So while it is important for an LLC to do their operating agreement, and attached to that are some meeting minutes, and also important to keep track of contributions and investments and anything else that the LLC might partake in, they really aren't required to hold or have annual directors meetings or shareholders meetings or things like that. That's held under like corporate governance laws, more so for corporations, S Corp, C Corps, and professional corporations. And just to leave you with that last tidbit, if an LLC is taxed as an S corporation, that doesn't automatically require them to have annual directors meetings, shareholders meetings, things like that, because they are still LLCs. I get that question sometimes, going like, well, if I'm an LLC taxed as an S corporation, what's my corporate or entity governing rule? It's still the LLC. The S corporation is a tax designation given by the IRS. So I went over time. Sorry about going over time, but a topic that we wanted to run through, and there were some very, very good questions here asked. I know there's some other questions that potentially weren't able to answer in real time. So the team will get back to you. And again, my recommendation is always, if there's any questions here, reach out to us, reach out to the team if you know your account manager. If not, you can reach us through some different platforms. And all else fails, you can always email me individually. My name is Milton. You can just reach me at Milton, MILTON, at CorpNet.com. Again, that's Milton, MILTON, at CorpNet.com. And if I'm not the person that can actually assist you, or if you have an account manager, I'm going to direct you to the right place. So thank you very much for everyone that joined live. Thank you who are watching on a rebroadcast. We appreciate your engagement here with CorpNet. We appreciate you being partners of CorpNet, and we're always looking for feedback. So if you have feedback about our processes and our practices and anything like that, and want to share your experience, you have my email. You can reach me directly. And then if you do have any suggestions for topics that you would want us to cover, through this sort of avenue or through a webinar, feel free to drop it in the chat platform that you have available to you now, and the moderators will pick that up, and we will create our list for 2025 and hopefully present on something that you also suggest. So once again, thank you very much for joining. Our next live will be happening sometime in January. We don't have the exact date yet, but once we do, we will send that out to the masses. So stay tuned for that as well. Once again, thank you for joining. My name is Milton Turcios, VP of Operations. If you want to reach me, Milton at CorpNet.com. I appreciate your time. Thank you for joining us.